Welcome to the Cannabis Detector Podcast. No sugar, all spice. With the industry BS detector in residence, Kristen Yoder. This episode is part of a sponsored series brought to you in collaboration with Quiver Financial.
Hello, my Cannabis detectors. Thank you so much for joining me today. I am going to do a special series with my guest, Colby Mcfadden, called the All Things Green series. And we're going to be discussing the money aspect of cannabis, investing in cannabis, taking a look at publicly traded companies, discussing due diligence practice, what you should be looking for if you're going to invest or get into the industry. So thanks so much for joining me today.
I'm excited to be here, and let's remember we'll try and detect any BS at the same time, since that's what you do, right?
Always. Well, I mean, if you're going to invest in cannabis, you're about to step into some whole other bullshit. So that's the point of these series, is to get you educated and hopefully to answer some of the questions that you might have when you're doing your due diligence on these companies. So, Colby, your company is Quiver Holdings. Why don't you tell people about you and your company?
Sure. For about 2 decades, just over 2 decades now, I've put most of my emphasis on what you would call wealth management, which is just a fancy way of I've been helping, old rich people manage their money. And a few years back, probably close to 10 years ago, we transitioned into investment banking, which is just another fancy way to say if there's an entrepreneur that's trying to build a business and they need to find financing for it, they come to guys like myself, and we try and align investors with the entrepreneurs and structure the deals. And as you can imagine, as cannabis has become this emerging industry, a lot of our investment banking focus the last couple of years has transitioned over into here. So we've seen all kinds of deals and all kinds of people come through our doors, and it's ever entertaining.
And all types of bullshit.
All kinds of it.
Yeah, so I'm not the only bullshit detector out there, and in your position, it really is what people pay you for, is to make sure they're not investing in some bullshit. So that's today's topic, is discussing some of the more complex investment models and deals, and how to do due diligence. So let's get started with the ever popular reverse takeover in Canada. This is something I've seen several US companies doing, and I'm not fully sure what that means.
Well, yeah, that's a great question, because you're going to see it a lot, and we typically see these RTOs, or reverse takeovers, or reverse mergers, or reverse IPOs, whatever it may. There's a few different phrases you can use there. Essentially, at the end of the day, and it's not a bad thing. So realize. That this is a structure and a process of a company to find capital that's been around for a very long time, but it's also the least expensive or capital intensive way for you to essentially go public as a company. And so that's why we tend to see it used more in micro cap companies, small companies that may be a little more conscious or concerned about what they spend. So, if you're going to do an IP, or if you're going to become a publicly traded company, you can file all the paperwork the long way and file for an IPO. And that's a much longer, more expensive process than going out and finding a company that used to be actively traded, or may still be on a stock exchange, but maybe they've let all their finances lapse. And so they're not active, by the sense of how a stock exchange would be. And you acquire the shell. So you hear people say, "Oh, well, we got a shell company." Okay, so essentially, a shell company is a company that's already got a stock symbol. They've already gone through the IPO process, but there's no business in it. They've essentially gone defunct. And now you can get the shell and use that as your vehicle to become a publicly traded company, and it's a much lower cost, faster way to get yourself access to public markets.
Do Do these companies ever do an RTO on an existing operating company that is in the cannabis industry, or are they mostly looking for shell companies?
Yeah, you could go either way. It can work either way. Typically, you see them do it with a shell that is not operational because that's a lower cost proposition. You're not doing an acquisition. You're not having to bring cash in typically to the existing shareholders. So we've seen it on both sides of the fence, but typically in this space we've seen more where it's a company that was somewhat defunct and didn't have operations.
I've seen that. The other thing I want to ask is people are doing these RTOs in Canada because it's more difficult to do it in the US. But are companies that touch cannabis even able to be publicly traded in the US? And is there a reason, if they are, why they are not and they're choosing to go to Canada?
Well, that's the gray area, and it's up to kind of where your lawyers are. Most advice that people have received is if you're in a business that touches the plant, um, the public markets of the United States are not available to you, and so that's why it's been a lot easier to go north and go up to Canada, where their capital markets have been more accepting of this. Now, that also brings up the question of, okay, well then how does a company like Tilray or Kronos, so they're now traded. They started in Canada and got a listing down here in the U.S. And those are usually what we call ADRs, American Depository Receipts. So they're domiciled up in another country. Their operations are in other countries, but they create this depository receipt that gets so that way U.S. investors can invest in that operation, and that has seemed to work fine with those organizations that have done it already.
What about taxes? Is there a difference on the taxes that they would have to pay in Canada versus the US if they're being publicly traded here? Or is the taxes only for where they're based?
Yeah, so the corporate taxes are going to be essentially where they're based. So that's why you've seen over the years a lot of companies have re-domiciled to places like Ireland, where they have a very low corporate tax rate. Like if you were to Google companies domiciled in Ireland, you'd see a lot of the names that you're very familiar with, like Google and things of that nature that you would never know had domiciled parts of their business in Ireland for the tax basis. From an investor standpoint, you as the investor buying the investment, what can happen is if you have a asset that's domiciled in another country, is you can have when you get your 1099 that following year, there are some areas in there that you might have some foreign income that comes off of those investments. But that's typically more on a stock that may pay a dividend or something that kicks out a capital gain. Most of the stocks in the cannabis space are not designed for income generation. They're just growth vehicles. So it's going to be pretty rare right now that somebody would have to worry about their personal tax situation in investing in something that's a Canadian-based company.
Now that you mentioned it, for our listeners that don't know about 280E, which is in the US, it's a punitive tax code that any company touching cannabis cannot write off any of their regular business deductions. The only thing they can write off is their cost of goods sold.
Mm-hmm.
Does Canada have the same punitive taxation issues?
I don't believe so, but I don't know. That's a good question. I've never really done the research on that side, and I'm going to say I don't believe so because of what they've been able to do in capital markets. But I'd have to do a little homework to give you a firm answer.
I would definitely want to know that because I would I would absolutely invest in a Canadian company over a US company that touches cannabis just because 280E is ridiculous and expensive. But I'm getting off track. Another thing that we see a lot is the press release, which for people that might not know, there are incredibly restrictive laws against cannabis advertising. There was actually just on the news that there was going to be an ad on CBS for cannabis by Acreage Holdings that they are not going to allow. Although every other ad is basically like drink beer, buy things that will kill you, etc., but not cannabis. I think that it's an interesting thing to see that because you can't advertise, a lot of these companies choose to use press releases that look like maybe they're advertising, or it's a way for them to pump up the value of their stock by making people think that they're doing something. How do people tell the difference between uh, just a regular press release? Because in Canada, they require publicly traded companies to release press releases every time they do something, essentially. How do you know when it's legitimate and when it's just an advertisement dressed up as a press release?
Yeah, that's a great question. Uh, a lot of that comes to just experience, right? And if you're a newcomer to investing in cannabis, this is where you being slow and steady will pay. But right now there's this palatable taste and smell around this industry that we call FOMO, which is fear of missing out. And because of that, investors don't always do their homework, or they don't even necessarily know how to do their homework. And when it comes to the press release side, this gets interesting because the reality is that the process of doing press releases is not a bad thing. So some companies I've seen in the press get a little lambasted for all the press releases that they're doing. And the reality is, if you think about it from an investor standpoint, if you take your hard-earned money and you invest it into a company, you want to know that the company is active. You want to know that they're doing something with their money. And the way that they let you know that is through the press release process. So it's a healthy, normal way of doing business. And where your question comes in is, okay, how do we separate what is a normal, healthy way of doing business from what could be a hustle or a scam? And there is no real tangible way other than observing the industry. And what every investor should do is understand that at the end of the day, the best way to make an investment is to step back and look at the industry that you're in. So you have the cannabis industry, and you can break that down. You've got cultivators, you've got distributors, you've got the biotech guys that are looking for healthcare and efficacy, you've got consumer goods. So in all those different categories, what an investor should be doing is they should be saying, okay, in this particular category of biotech, what's the biggest players? Like, who are the main big players in the public markets if you're trying to find a publicly traded company? And you narrow it down to the top 3 or 4 names. And then from there, you start to see how those companies behave. And when you've narrowed it down to the big players, you're eliminating a lot of the hustle because they got big for a reason. Okay. And typically, if they have a product behind them, they're going to get traction. So you narrow it down to the biggest players, and then you start paying attention to how they handle their press releases, and you'll start to get a feel of what's legit and what's not. And you have to look at the press releases and really ask yourself, is this have any substance? Because I've seen situations where a company is press releasing things that we already knew about from 2 or 3 months ago. And the biggest mistake investors make is they think they see a press release and then they run out and buy the stock thinking that, hey, that news is going to move the stock. Well, the Wall Street and the money world's funny. It's very counterintuitive. We have a thing that's called buy on the rumor, sell on the news. So typically, by the time the press release comes out, anybody who was involved or close to the company was buying on the rumor of something potentially happening. And then when that news comes out, the stock drops, and the new purchaser is sitting there befuddled going, shit, I don't understand this. The press release, it was good news, and the stock still went down. Well, it's because the smart money was there before the press release. So it's a long way to answer your question of saying the only way to really know is to be a good observer. And then more importantly, before you invest, you've got to go through a process of saying, hey, let me look at the industry. And if I'm going to invest, I want to invest with the best. So why not focus on whoever the cream of the crop is of each one of those particular areas within a sector?
That brings me to, and I know we don't have much time left, so I'm going to try and make it quick. But with Afria, they had these press releases saying that they made these South American acquisitions that were worth tens of millions of dollars. And that looks good. And then there was the short sellers that came out. I think Hindenburg
Hmm.
Quintessential something.
Hmm.
And they were saying, yeah, that's completely overvalued. There's nothing down there. We went to Jamaica, there was nothing there. And then someone else was like, okay, we went to Jamaica, there was a store there, but no one addressed the South American assets. And so then there's the press release you could believe. Then there's the short seller report, which you could believe, but then both of them have self interest in mind when they're putting out these reports. How does somebody know who to believe?
Yeah, it's tough because it's not so much the press release that does the damage, it's the response to the press release by the investors. And this kind of goes back to what I mentioned, that palatable taste and smell of FOMO. Um, this stuff only happens when there's too much money chasing too few deals. You know, if the cannabis business was emerging in 2009, none of this stuff would be happening because trying to find capital in 2009 and 2010 was incredibly difficult. It wouldn't have been available for all these entrepreneurs. So what you're seeing there is really speaks to this psychology that happens when you get into when the economy across the globe has gotten to a point where people have done well in a lot of other areas of their investing and they're willing to be frisky and come over into the cannabis space. So none of this would be happening if there wasn't this bigger, rising tide behind it. And with that is what happens is people go, hey, I missed out on owning Apple, or I missed out owning on Google, or whatever it may be. And so they're going to just chase whatever name. The best way to answer all these questions or to protect an investor is to say, hey, eliminate the emotion and treat this like a business, because at the end of the day, it's your money, it's a business. And so you have to look at all these press releases and say, hey, this is all great, I want to, these are the kinds of things I want to see, but then dig deeper to figure out, is there any substance to what they're saying? And it's not an easy process, and that's why a lot of people use experts or professionals like us to help decipher and dig through all the BS.
I mean, who would invest if they were skeptical of everyone, which is me? So I am not an investor because I don't trust anybody. Obviously, that's not the smartest way to go because I could make money if I made the right investments. But that's the point of this episode is before you make an investment, do your homework, remove the emotions. Just, don't jump into anything. Seek out advisors. Don't fall for the news. Make sure that it is substantiated to the best of anyone's abilities before you do anything.
Yeah, I would agree with all that. And picking an investment's similar to picking a boyfriend or a girlfriend, right? Is you go out there, and if you decided that you do what you do nowadays, whether that's Tinder, JDate, or chubbychasers.com, whatever is whatever somebody's fix is, and you go out and you start meeting people, and then you start narrowing those people down to a couple that you really connect with and that you really like, and then you keep doing your homework, right? And I bet you with anybody, you line up 3 potential dates, you're going to find at least one that's what you're describing, the press releaser. They look good on the surface, they say all the right things, but once you get into bed with them or get a little deeper in the relationship, the ugliness comes out. And that's why it's important, just like in dating, that in investing, you take things slow and you really just do your homework and realize if you miss one opportunity today, there's going to be plenty tomorrow. You know, Greed has lost more money than fear. And so if you can just temper the greed and realize if you miss today's opportunity, not a big deal, because there's going to be another opportunity. We were having all these same conversations in 1997, 1998, 1999, around the dot-com era. And you fast forward to now, and most of those companies that we were talking about don't exist anymore. And the same thing will happen here in the cannabis space. And so that's why I would encourage everybody is fish upstream, look for the bigger fish, because that's where you're going to have, especially if you're a cynical investor and you want to protect yourself from losses, then right now focus on the ones that are executing and that have traction in their business model.
Oh, something I just thought of as well. Another thing you can do is on the SEC website. I think you could just Google cannabis SEC fraud. There's several companies that have been found to be fraudulent, and they talk about how they were fraudulent. And that's a good educational source to be able to recognize possible fraudulent behavior or activities in the future with some of these seemingly pump and dump schemes that are going on. But that's all the time we have for today. Where can people find you?
Quiverfinancial.com is our website.
And you said you do events?
We do. Once a month, we do events focused on investing in cannabis. Most of those events are held in our Newport Beach office, Newport Beach, California. Eventually, we'll start doing some that are web-based, but I have a tendency that when I'm in front of the room, I like to have freedom of saying things, and since we have licenses, we have to be careful of, and also relationships that we need to be sensitive to. We tend to be much more open in front of a room without a camera and recording than we do online. So
that makes sense.
Yeah, it just is what it is.
Yeah, I mean, that's a general rule for the cannabis industry, I think. Be careful on camera and audio. Okay, well, thank you so much for coming on, and I look forward to covering the next topic in our next episode in the series.
I appreciate it, and I look forward to it.
All right, thanks for listening. Have a great day.
If you've enjoyed this episode, please be sure to subscribe and leave a review on your favorite podcast host. It really helps us get the truth out to a larger audience. You can follow us on Instagram at CannabiSPod and on LinkedIn at the Cannabis Detector. Show notes and links to articles referenced in this episode are available on our website, CannabiSPod.com. Is there a topic you want to hear, or do you have some BS you'd like to tell our audience? Send us a message on Instagram at CannabiSPod. Stay skeptical.